Thanks for joining us today. We have Greg Clausen, a mortgage specialist and loan originator at Fairway Home Mortgage. Greg, thanks for joining us.
Thanks for having me.
Yeah, so today we want to touch on a few things. Conventional wisdom from 30 or 40 years ago might not apply today or might be different, and so there's probably different ways to look at it. And so the conversation today is about kind of your mortgage and the equity in your home and how to use that as a tool while you're still here and alive and living in your home. So, really it's reframing the mortgage world. And so like a lot of people have thought, the mortgage could be a burden to have it, but I think there's another way to look at it. And maybe it's the equity in your home and how we could use it as a powerful financial tool.
Mm-hmm.
What do you think about that?
I think liability management is just as important and critical as asset growth.
Mm-hmm.
I like to look at the mortgage as leverage, and the real magic happens when inflation reduces the real fixed cost of your mortgage payments over time.
Yeah.
You're using yesterday's dollars to pay a fixed cost for today's appreciating asset.
Yeah. So talk about that. Like you've got equity trapped in your home, or some people may say, well, I'm sitting on this asset, but I can't do anything with it. That may not be true. There are options, when applicable, to have your equity work for you. Can you talk through that, kind of what it may look like, or how you think about that in your world? I mean, you see it every day.
Yeah, I see it every day. A lot of people have equity, real money trapped in the walls of their home, and there are opportunities to use that equity and diversify it and unlock some of that equity and put it into a diversified investment.
We like examples in this, right, to make them applicable to our lives. Give me an example of a client you worked with over the past few months, where you've been able to tap into some of that equity and use it to help improve their financial situation, or maybe accomplish some financial goals that they didn't think were possible.
Sure. Every scenario is going to be based on someone's personal and specific individual financial goals as guided by their financial advisor. Recently, I helped someone unlock $250,000 in equity that they used to reallocate into some diversified investments and to start a small business.
Yeah. And I do realize, it's not right for everybody.
Mm-hmm. Correct.
So guide me through the conversation that you would have with somebody when they say, "Hey, Greg, I watched a video on YouTube, or I was on social media and I saw this idea. I wanna tap into my home equity." It doesn't come without risks. We know that.
Correct.
But guide me through what that conversation looks like with a client and some things that they need to figure out to see if it is right for them. Because it's not right for everybody.
Sure. It all starts really with a liability audit. We like to look at the overall financial picture to make sure that the client's short and long-term goals and what we are planning and proposing to do for them is in line with their financial plan, their overall financial plan. The money that's just sitting idle in equity in the home is doing just that, is sitting idle. And there are opportunities to withdraw some of that money in the form of either a cash out refinance or home equity loan and put that money to work for them.
Yeah. And conventional wisdom has always said, hey, I should own my home outright, right? And then no one can take my home from me. I hear clients say that all the time. And I don't disagree with that in general. It's great to own your home outright. But can you talk us through, perhaps maybe you're seeing a shift in that traditional mindset to maybe this newer mindset where you can or should or could use equity as kind of a growth engine or asset to your advantage?
Yeah, I think cash flow is really important. You've got assets, liabilities, and many home buyers and homeowners are really concerned with cash flow nowadays.
Yeah.
To give you an example, we may advise someone to put less money down. Let's say they wanted to do a 15-year fixed rate mortgage, put less money down, maybe do a 30, take the difference in what would have been that payment between the 15 and the 30, put it into a side fund and let it grow. 15 years from now, you would have wanted to have a free and clear house. We've got that side fund. If you wanted to, at the advice of your advisor, use that, pay it off, and then you've got all the extra interest that you've accumulated over the years of that asset growing.
So that's a great point, because we see clients a lot with this same situation. They'll say, Brandon, what should I do? And if rates don't dramatically differ, right? So every situation is different. But I say, well, it's nice to have the ability to have less of a payment required monthly. Maybe take a vacation with your family while your kids are young. So it gives you the flexibility, and you always have the choice to pay extra. No one's going to stop you from doing that. But I think you're then sitting in the driver's seat to say, well, I can pay extra if I want, but if I want to go on that vacation, I'm going to do it. I think we're starting to see a shift in the mindset of memories matter just as much as money. If not more sometimes, right?
I would wholeheartedly agree with that. And that's why every plan has to take into consideration, an individual's personal and financial goals.
Well, and to that point, we've talked about situations where, this could make sense or this is a great idea, but but it's not that case for everybody. Are there examples where you'd be like, hey, this is definitely kind of a no-go zone. I wouldn't recommend taking home equity out of your home in these scenarios? I mean, do you have any of those just quick off the...
I think discipline is a big factor when it comes to this. You know, if I do have someone who would like to have a home paid off in 15 years, and just after speaking with them, you know, it may be a better option for them to go into a 15-year fixed rate loan, which forces them to make that payment, and it essentially forces them to reach their end goal of having their home paid off in 15 years.
Yeah, I mean, we've seen clients that have interest rates of 3% or 4%, which sounds like a foreign number nowadays. Right. And they're like, hey, Brandon, should I pay my home off quicker? Because then I can just save money quicker. And I'm like, yeah, if you're disciplined, but the reality is generally speaking, once that payment goes away towards your home, a lot of people find a new purpose for that money. And I'm gonna tell you, it's not always to save or invest.
Correct. And that brings
that's okay. Right.
And you bring up a great point about rate. You know, if you're sitting on a 2.5%, 3% rate, essentially that's free money when you factor in inflation.
Yeah.
You know, so we want to take a look at that. You know, and see how that fits into their overall profile.
The cheapest way to repay debt is with an inflated dollar.
Right.
Right. You know, it is.
And that's the beauty of a mortgage. You know, as I mentioned earlier, you're using, you know, today's dollars to pay off, you know, fixed payments using today's dollar, yesterday's dollars to pay off, you know, of an appreciating fixed asset.
Yeah. So here's probably a softball question that you get every day. Maybe I'm wrong. And I get this a lot is, where are rates going to be next year? So if you're put on the hot seat, do you think we stay steady, maybe slightly higher, lower? I won't hold you to this.
Sure.
But it's got to be asked to you almost daily.
Yeah, everything I've seen lately, it's looking pretty steady. There is some indications that we could see a downturn, but everything has been moving so frantically and so erratically, and not always in line with expectations. So it's tough to say. There's so many moving parts right now. Yeah,
market expectations and Fed expectations. There's a reason why there's a gap there.
Right.
And I think people... most don't understand that just because the Fed said they're going to lower rates doesn't mean mortgage rates will necessarily come down right away, right?
Sure. And rates are what they are, you know. Right. So you've got to take a look at what they are and just use today's rates to look at your profile and and make a plan based on that. You know, none of us can predict the future.
I love it. We'd be billionaires with our own private island, right? We could.
Exactly.
I don't have my own island, so therefore I'm not fortunate.
Me neither.
So in your world, there's a lot of people who call themselves mortgage specialists or loan originators. What differentiates the really good ones from the basic ones? I mean, it's got to be the line of questioning or what they're looking out for, but can you give us just some, if someone's going to get a mortgage, what should they be looking for from their originator?
Sure. It all starts with the interview and asking detailed, comprehensive questions. And every lifestyle and every individual has different goals and different plans. So really what we like to do is we like to integrate our mortgage plan into the overall short and long-term financial goals of the client, both personally and professionally, financially. We want to look at, you know, do you have children going to college? Are you looking to do an addition? Do you have an interest someday in purchasing a second or vacation home or an investment property? So I think the difference in, you know, a true mortgage advisor versus a lending or a loan officer is we're going to look at how the mortgage fits into their overall financial plan and make sure that it's in line with their goals.
Yeah. I mean, as a true fiduciary like we are, I mean, let's just make sure we're doing the right thing for people. Aligns with their goals, but you're not going to know their goals unless you ask them what they are.
That's so.
So Greg, thanks for filling us in today on equity in the home and kind of what you're seeing in this world today. If someone wanted to get a hold of you, how would they do that?
You can find me online at gregclausen.com.
Cool. Well, thanks for joining us today, Greg.
Thanks for having me.
Yeah. Let's keep moving forward together.